Maybe we give it another minute or so and then we'll start. I can see still people coming in. Okay, it is 3:30, so maybe I'll just kick it off. And then we can let people come in as they join maybe a little bit later. Yeah, so good morning, good afternoon, good evening, everyone from wherever you join us. My name is Sabine Spohn, and I will be running you through today's session on certified gender bonds, what, why, and how. We are very happy to have you all here today to join us to what I think is a very exciting event. As some of you might know, ADB has recently supported or invested in the first certified gender bond in Georgia. And so I'm very delighted to have a distinguished group of speakers here with me today, who in one way or the other have been part of this journey. So the webinar itself will take a look at various issues of issuing a gender bond, and most importantly also why we need to have more of these. But before I'm introducing the speakers, just some quick housekeeping rules. There will be a Q&A part, so please use the chat function to post your questions so we can address them later with the audience. The webinar will also be recorded and we'll share the link later. And then just to be clear, while we use the term gender bond here, the official term is actually social bond with the gender focus, but we just thought it's easier, but just to clarify this from the outset. And now, let me please introduce Asif Chema, our Director of Financial Institutions Division at ADB's Private Sector Operations Department, to kick off and give some opening remarks. Asif, over to you.
Thank you, Sabine, for the introduction to this important webinar. And I want to extend a warm welcome to all our participants and panelists. As we celebrate Gender Month here at ADB, we recognize the essential role women play in building a vibrant and resilient economy. However, as we know, women in Asia face significant obstacles in accessing finance, and they account for the largest share of the MSME finance gap in emerging markets, which is valued at a staggering $1.7 trillion. Financial institutions and capital market instruments are critical links that connect women entrepreneurs to the wider economy and can help bridge this gap. Hence, it is necessary to expand capital market instruments and provide women with a wider range of financing options. While gender bonds are gaining recognition as an effective mechanism for unlocking capital for women, so far only 1% of sustainable bonds referencing SDGs are tied to SDG 5, which is gender equality. Additionally, there are only around $17 billion in gender-labeled financial products within a global sustainable investment universe of over $40 trillion. We must take action to change this. As of March 31, 2022, ADB had issued more than $7.9 billion in thematic bonds across education, gender, health, and water themes, with $3.6 billion allocated to gender. While this is helpful, more work needs to be done in this area. It is also crucial to ensure that these instruments follow international standards and best practices and are transparent, sustainable, and responsible for maintaining investor confidence. As someone with considerable experience in the gender and finance space, I believe that this event provides an excellent opportunity for us to reflect on past experiences, learn valuable lessons, and hear from practitioners. I'm looking forward to this exciting session, and I will now hand over to Sabine without further delay. Thank you, Sabine.
Thank you, Asif, very much for setting the scene. So without further ado, actually, I want to introduce our great group of speakers. And I'm starting with Ms. Valérie Guillaumin. Valérie joined the International Capital Markets Association in their Paris office in 2014. In her role as Director of Sustainable Finance, she is largely dedicated to the Secretariat, the Executive Committee of the principles and the related working groups. But she's also a strong promoter of gender equality and so is coordinating and arranging the events of ICMA's Women's Network in Paris, and has also been involved in the recent publication of using sustainable debt instruments for gender equality. Valérie has a master in French business law, so I'm very happy to have you here, Valérie, today, and good morning. Second, our very own Gemma Perez. Gemma is a unit head in the private sector operations department at ADB, where she works with financial intermediaries across Asia and the Pacific to promote socially inclusive and environmentally friendly investments. And Gemma has a lot of experience, I think about 20 years of experience in international development finance across many regions of the world. Before joining ADB, among others, she worked with private equity firms, investment funds, the Inter-American Development Bank. She is graduated from Georgetown University and is a CFA charter holder. Thanks a lot for joining, Gemma. Now turning over to Bernard Bartels, please. Bernard is the Group Managing Director within Scope Group, one of Europe's leading rating agencies. On behalf of Scope Group, he acts as the head of ESG and oversees the analytical work at Scope ESG Analysis GmbH, which includes ESG ratings, second-party opinions, and climate risk products. Bernard holds a PhD in macroeconomics and a postgraduate degree in international economics from the Kiel Institute for the World Economy. Welcome, Bernard. Happy to have you here with us today. And last but not least, and very importantly today, we have Ilia Revia with us. Ilia is the Chief Executive Officer of the MFO Crystal, the largest non-banking financial institution in Georgia. And Crystal was actually also the issue of the first certified gender bond in Georgia, so very happy to have him here with us today. He was appointed CFO at Crystal in 2019, but before that was holding several high-level positions in the Georgian banking sector. He is a certified project management professional with graduate degrees in project management from the George Washington University and IT and business innovations from Jönköping University in Sweden, as well as undergrad mathematics degree from the Georgian Technical University. Thanks for being with us today, Ilia. So actually, I have a lot of questions that I could ask, but I thought that what we could do first is that I could ask each of you a question, starting with Valérie, that maybe you could respond to in the next 5 or so minutes, and then we will take some time to also answer some questions from the audience. So Valérie, I think it would be interesting for the audience and also ask maybe a brief introduction to ICMA, the International Standard Body setting body for debt securities, and then also maybe to talk a little bit about the underlying principles for social bonds, for which gender bonds are part of that, and the opportunities and challenges to expand on these and have more of them, and what the international standard setting body can do to help with that. Over to you, Valerie. And I think we will share a short presentation as well that you have, Faye. If you could start that, please. So Valerie, you are on mute, I think. Sorry, Valerie, we cannot hear you. I think you have to unmute your mic, maybe.
Can you hear me now?
Yes, now we can hear you. Perfect.
Because I cannot unmute myself, so I get some troubles. Thank you very much, Sabine, and thank you very much for the Asian Development Bank to inviting me today. This is a great honor. So let me start with a quick introduction about what is ICMA and especially its role in sustainable finance. For those of you who don't know ICMA yet, ICMA is a not-for-profit organization headquartered in Switzerland, in Zurich, with offices in London, Paris, where I'm based, Hong Kong, and Brussels. So ICMA brings together members through regional and sectorial committees focusing on a comprehensive range of market practice and regulatory issues, prioritizing sustainable finance and the core fixed income I'm sorry, I get now troubles with my headset. Sorry. So I was saying core fixed income market areas, which are the primary market, the secondary market, the repo and collateral. ICMA, it's around more than 600 members active in all segments of international debt capital market in more than 60 jurisdictions globally. As mentioned by Sabine, ICMA is also an international network for women in capital markets that provides an open forum to discuss issues relevant to professional women in the international Is that okay?
Yes, now we can hear you. You were
Okay.
just gone for a moment. Yeah.
So ICMA currently provides the secretariat for the principles following its appointment by the Executive Committee of the Principles in 2014. So we can move to the next slide. So as already highlighted by Asif in the introduction, in spite of some progress in bridging gender gap, debt capital flows are now on track to meaningfully contribute to the UN Sustainable Development Goal, SDG, donc number 5, to achieve gender equality and empower all women and girls. As UN Women urge in its review of progress toward achieving gender equality, without heightening commitment from the global community, gender equality will remain nothing more than an unrealized goal. So capital markets have significant efforts to make in this field. If you look at the environmental finance report related to the contribution of the sustainable bonds, including sustainability linked bonds to the UN SDG, you can note that SDG 5 about gender equality constantly appears at the lower end of the scale representing a tiny fraction of the global sustainable investment space. However, we cannot ignore that gender equality remains a concern, even if in developed countries. With the objective of broadening the scope of sustainable finance to direct capital at scale, to reducing the gender gap and to increase wider take-up beyond the financial sector into real sector, IFC, in partnership with the UN Women and ICMA, developed guidance for the purpose. So we can move to the next slide. Thank you. This guide provides guidelines based on existing frameworks to aid the ecosystem of the debt market, including new and existing bond issuers, borrower, underwriters, arrangers, external reviewer, to take action to integrate gender equality objectives into sustainable debt products in both the public and private sectors. It's also a resource for investors seeking to understand and support projects and strategies that are designed to advance gender equality. ICMA and the Executive Committee of the Principles have released various guidelines to encourage the debt capital market to consider issues related to gender. Debt instruments such as social, sustainability, and sustainability-linked bonds provide financing opportunities for market participants that want to advance gender equality. Let's start with a brief reminder of the social bond principles. So we can move to the last slide. Thank you. So social bond principles are really fit for purpose instruments. The principles are voluntary process guidelines that recommend transparency and disclosure. Social bonds are categorized under the use of proceeds approach. This means that issuer must apply all the proceeds from the bond to implement the types of projects that were identified prior to the bond issuance. The social bond principle specifically identifies women as an eligible target population for social bond projects. And in the list of common project categories are included socio-economic advancement and empowerment. When incorporating gender equality objective into a use of proceed bond, issuer can choose among three options. First one, to make gender equality the sole objective of a social bond. Then it's often referred to as a gender bond, but gender bond is not a separate label. The second option is to include gender alongside other social objectives in a broader social bond. And the third option is to include gender alongside green objectives in a sustainability bond, which is used to finance a combination of green and social projects. The complementary handbook for impact reporting provides a non-exhaustive list of quantitative social indicators that may be considered, notably related to women's empowerment. Social or sustainability bond issuers can consider how their use of proceeds can mitigate gender inequalities and measure and track gender gaps impact in their reporting. Issuers can also consider gender across their organizations. If bond issuers do not have sufficient pipeline of eligible projects, they can look towards general purpose bonds, which are the sustainability linked bonds as defined in the sustainability linked bond principles. That can be a good alternative to include gender equality objective in a funding program. An SLB issuer can demonstrate its dedication to advancing gender equality by committing to achieve one or more gender-related key performance indicators assessed against predefined sustainability targets. The Sustainability Linked Bond Principles KPI Registry, which has been published in June 2022, so last year, and all those documentation are available on ICPA website. So the KPI registry includes high-level recommendation as well as examples for the selection of KPIs. It guides market participants in the understanding of material issues, definition of calculation methodology, and or calibration of their targets. It contains examples of KPIs related to diversity that can be easily combined with environmental related KPIs. Finally, the green, social, and sustainability bonds high-level mapping to the Sustainable Development Goals includes a table that illustrates how the SDG may be considered by both the private and public sectors as they identify eligible operation for green, social, and sustainability bond use of proceeds. This table is a result of a high-level review of each of the 17 goals in order to identify those that may be relevant to either the Green Bond Principles or the Social Bond Principles project categories. The 2022 edition of the SDG mapping includes now a new section on gender lens investing that gives example of eligible project and reporting indicators. It encourages issuers to disaggregate data by gender as part of their impact reporting process if the target population includes women. I stop here and hand over to you, Sabine.
Thank you, Valerie. I think that was quite interesting to hear, and the scrutiny actually the principals have that need to be applied if one wants to issue a bond that is called a social bond or sustainable linked bond and whatsoever. So best now then also to hear from Ilya, who just actually went through this whole exercise and scrutiny and being able to call the bond a certified bond in the end, a certified gender bond in the end. So Ilya, it would be great to hear from you, just a brief introduction, of course, of Crystal, and then maybe to talk briefly about the barriers women face in Georgia, and then what was Crystal's motivation to go through all the hoops of having a certified gender bond as the first issuer in Georgia. I think that would be of very much interest to the audience. Over to you, Ilya.
Thank you, Sabine, and thank you everyone for being here. Good afternoon or good day. I will try to do a brief overview of Crystal. So we were founded in 1999 as a company. We are currently the largest non-banking financial institution in Georgia. And the story goes that we were founded as a response to an important crisis. It was a refugee crisis itself in Georgia as a result of the war in Abkhazia. So the company itself was originally an NGO, which then became a commercial firm trying to help the internally displaced people from Abkhazia, which were a lot, we have more than 200,000, to actually get back on their feet and to reintegrate into Georgia's society by starting new businesses and giving out grants to them. Now, since then, we have grown. So you can see our geography. We're basically located almost everywhere where Georgia government holds effective control of, 120,000 clients, our permanent clients, and 150 million assets. Now, majority of our clients are outside of the capital city. So we are predominantly based in agricultural, in micro business, especially in the rural areas and smaller towns, Georgia. And more than roughly 60% of our clients are women. And this has been traditionally so for years and years. That we have also noted that despite the fact that more clients are women, they are not so much risk takers in the sense of when we observe the market for years and years. And I will talk about the reasons a bit later, how this has developed during our observations and what were the programs we have tried to run to actually empower women entrepreneurs in Georgia, and there's been quite a lot. So over these years, Crystal has somewhat became the most well-known company in Georgia, at least in the financial sector, trying to support women entrepreneurs. So from 2016, we ran programs with our partners trying to give out the entrepreneurial skills, the entrepreneurial knowledge, how to start the business, how to run the business, how to do marketing, how to grow, how to work on your accounting. And all of this was a response actually to a lot of studies we've done. And we can see on the probably next slide, what were the major barriers to women entrepreneurship in Georgia. Now, first of all, those were obviously social norms. And Georgia, despite the fact it's located in the middle between Europe and Asia, and some of us, somewhat consider it as in Europe, but some, geographically it's still Asia, but culturally it's in the middle. Many women face, those social norms which limit actually their engagement in labor and limit their engagement in economic activities, especially in the rural areas. And you can see a photo of one of our clients who was participating in the entrepreneurial skills development program, which we run across the entire country, called Buzz Georgia, during COVID. And she was trying to actually run the business, but at the same time, obviously, she had to stay home and take care of small kids. Those are, somewhat limiting on societal norms and societal beliefs of whether women can engage in business, whether it's better for them to stay at home, and that's one of the main things. Now, there's obviously a fear of failure, which they also face, and some kind of a lack of support, which implies obviously a lack of self-confidence. So the way we have tried to address this is by helping them to establish the businesses. Actually, we have founded a fully owned subsidiary, Crystal Consulting, which helps them in doing just that. How to establish the business, how to register, how to sort out your taxes, your revenues, so not to be afraid of all the things which come up when you become an established business. There's obviously an issue of the lack of capital. And traditionally, the land plots, or let's say even the capital, is majority owned by men in Georgia, which is obviously an issue, because when you go to the bank and you would like to start the business, and the bank asks you for the collateral, and you don't own that collateral, it is a problem. Local legislation is also somewhat preventive, despite the fact that we do have maternity leave. Only part of that is paid by the government. So Georgia does not enjoy a fully paid maternity leave at this stage, and not all companies can afford to pay. So that is somewhat another barrier for Georgian women to go into and start up and do the business. 7 family factors, and lack of network, and especially lack of network in the rural regions, because Tbilisi, while being a large city, more than 1 million population, and there was more access to the financial institution, there was also more access to business networks. Obviously, the rural areas lack them. Now, the way we've tried to address this for a few years now, and very successfully, is by running particular programs in the Young Entrepreneur School and Women Entrepreneur Schools in Georgia. And what we have done is that more than 2,500 women in Georgia have actually enjoyed access to those programs via trainings in entrepreneurial skills. And this is not a one training, but this is a year-long program in multiple things that they need to do. We also, during the COVID times, we actually went out to the region. So the program was not run in Tbilisi, but we actually went out with the buses and bringing the trainers into the places, like that. More than 4,000 women have gone through that school. And then when they went through the school, we have a micro-equity program from Crystal, wherein they pitch and the Crystal selects them, saying that, okay, we like that idea. It's a good idea. It can develop. We can give you micro-equity and then help you also in develop that business. And another boundary which they also had was obviously technology. It's not just about access to the finance, but it's very often access to knowledge and technology. And the other way that the Crystal tried to support them was giving a specific enterprise resource planning system. We call it the Crystal Mini ERP, which gives those women entrepreneurs an ability to sort out their accounting, sort out their sales, their logistics, their planning. And more than 300 of them have already, we started this program last year, have started using it. So all in all, this was a very interesting journey for us. And because we were so much engaged in supporting SDG 5, which is women empowerment across Georgia, we decided to actually participate in this great opportunity announced by ADB that we could be the first ones in Georgia to actually issue a certified social bond, and have applied. The process took us, if I reckon correctly, roughly 8 months because there were a lot of parties involved. We placed the bond, and there was also a co-subscription from one of the local banks. We also went through the entire approval process with a rating, making it actually certified, and with a local regulator, with a placement agent. So many parties involved, but everything played out very well and synchronously in the end. So we placed the bond in February of this year, and basically attracted the funding, and at the same time attracted a lot of exposure to the entire story and what Crystal does. Now, just in maybe a few words, Sabine, you could move to the next slide. The actual impact stories which we have generated, and we've decided to only list 4 of the very successful women entrepreneurs which we support along this journey with those funds. So you can see that it's very different in terms of both the age of those women entrepreneurs and also the industries and the stories that they have. So the Skiji, for example, the one on the top left corner, this is one of the very successful women entrepreneurs that has a traditional guest house in the western region of Georgia, and also traditional sweets producer. And that business has grown with Crystal for a few years and has expanded and a lot of exposure now. Then I'm happy to also introduce Hippo Velo, which to me as a mountain biker myself, it's a great business that a young woman is actually doing. A bicycle shop in repair service, which has grown also with Crystal. This is already becoming a network in Georgia of Hippo Velo shops across Tbilisi and hopefully some other towns in the future. It was founded by young women entrepreneurs. Then Tamar's business, she is actually from occupied region of Georgia, westernmost part, Abkhazia. So she had to jump through a lot of hoops to actually, start up the business, obviously, because Georgia does not exert effective control on that region. We helped her with the funding, we helped her with a lot of things in terms of, and she employs local people. She employs everybody from that occupied region. And the final one, I'm just going to do a very quick introduction of them because the huge stories behind those successful women entrepreneurs is our first Ukrainian client, Alina, who came from Ukraine after the start of the war. And she obviously was trying to actually restart. And her story is somewhat similar to what all the refugee, internal displaced people went through in the 90s and beginning of the 2000s in Georgia. And with our support, she actually established a jewelry shop in Batumi, which is a second largest town, and have been successful since then. So we're very, proud and that we can support them, and obviously we will be continuing that job in the future, and with this additional funding we have attracted. Thank you very much.
Thanks very much, Ilya. I think that was very insightful to hear from an issuer itself on the process and what you need to go through to get to the end and have a certified gender bond issued. But then also it's quite heartening to hear which type of woman will benefit from the proceeds of the bond. So we look forward to hear more stories to come in the future. You also mentioned the certification. So that leads me to actually our next speaker, Bernard. And so Bernard, your company, ESG analysis, Scope ESG analysis, has provided a second party opinion for this particular gender bond. So I'd like to hear from you actually maybe a bit about the importance of why we would need actually a second party opinion. Why you're not just issuing a gender bond. So over to you, please, Bernard.
Thank you very much, and thank you also for being here. I'm very pleased to speak a bit about our activity and the relevance of what we are doing. I think Valerie has already mentioned it very clearly. The ICMA provides the social bond or green bond principles for use of proceeds bonds, and in this context, second party opinions play a crucial role because they are certifying the extent of alignment with these principles, and in this regard they are key. Now, if you just move one slide further, I would like to just point to three important topics in this context. First, with briefly showing you what the approach can look like and which one we are using at Scope, and then I'm going to speak very quickly about project relevance and project impact. You just go one slide further, and another one. Thank you. So for us, it's very important to make sure that when we are looking at a social bond project or different projects, to ensure, first of all, is there ICMA alignment? To what extent is there ICMA alignment? And what else can we extract from the issuer's framework that gives us an overview of the relevance and of the ambition of the issuer with regards to the finance projects? And this leads to this human score that you see there. So there's a so-called top seal where we observe a transformative social contribution in addition to full alignment with the ICMA's social bond principles, and an exemplary project alignment with the industry's key impact objectives. And I'm coming back to that. And then we have another level for the human scores, which we often assign, which is where we see a significant contribution and full alignment with the social bond principles, and where the projects are described in a way that is very, let's say, common practice in the industry. And now then you have another level where we observe also ICMA alignment in terms of the processes and everything that is in place. However, there is insufficient quantifiable impact and maybe only limited alignment. And then there's the last category, which is something that usually does not occur, of course, because an issuer will not try to place a bond that is not aligned with the standards. Now, if you could just go one slide further, thank you, and another one. Yes. So when we think about do projects serve a relevant purpose, then we clearly have to look into what extent to what extent does the region in which the bond is placed, to what extent does it show a need for, in this case, finance, and what we observe in the context of the project that have been placed by Ilya and his company, we saw that, of course, there's a huge financing gap in Georgia, and that is very much mirrored by what we observe in developing countries, and it has already been outlined by previous speakers that this is the case. So interestingly enough, in terms of is there a finance gap, we think, okay, there is one, so that's important for us, compared to where we have seen other gender bond placements that were mostly in developed regions where this topic plays less of a role, let's say. Important, of course, to note here, we are talking in this, what we look at is a finance gap in general, so not only with regards to gender, but if you go one slide further, we can see also the importance of the impact relevance for looking at women's financing. So what for us is very important is to understand to what extent does the issuer test and check the impact of the proceeds, right? So how can we assess that the issuer is placing the proceeds in a way that they do have an impact that fits to the purpose, for instance, in this case, facilitating access to finance for women. And here I'm just giving you some examples. So some of the impact indicators that we note are the number of borrowers, here for climate-related loans. So you can also have multiple purposes being fulfilled with such a bond. And maybe most important, number of women borrowers in rural areas where we know that access to finance for women is especially limited, right? So we are trying to extract that information from the issuer's framework and to make sure that investors understand to what extent the issuer is ambitious to show the importance of the use of proceeds for fitting the purpose of accessing finance for women. Now, at the same time, when you have positive impacts from the lending, you may also face some risks. And what we deem important as a second-party opinion provider is to also speak about those risks. This has become especially important in the context of green bonds, because here more and more second-party opinion providers think about the so-called DNSH, do no significant harm. So we are not only talking about the project itself and access for women, but we are also talking about what other types of risks may be related to the projects that are not specifically related to this ambition to access finance, to improve the access to finance for women. And here, those risks can be manifold. I'm just giving you three. One could be funding risks, but more importantly, we have social risks related to overborrowing, right? So Ilya mentioned that there's maybe limited education, that there is limited collateral, and that people may overborrow and therefore run into difficulties that everybody wants to avoid. So what we are also doing in the context of an SPO is to assess to what extent the issuer is active in trying to prevent and avoid those types of risks that are clearly related to the projects. And then, of course, you may also face some environmental risks. So you can borrow or you can lend to a company that is maybe active in a sector that causes harm to environmental objectives. And that needs also to be focused in the context of assessing the ambition level of the issuers. And that is then ultimately also feeding into the overall score that you've seen in the beginning. So what we try to achieve is, on the one hand side, making sure the company fulfills the applicable standard, which is in this case the ICMA's social bond principles. But on top of that, we are also assessing a few other important components that relate directly to the projects, that relate to the impact, the expected impact of the projects, and the expected risks. Thank you for now.
Myself, sorry. So thanks very much, Bernard, for this interesting description on how the SPO process works, the second party opinion process, and what are the areas that you look at, because it touches a little bit on, making sure that the proceeds are used for the right purpose, and that actually also adequately we can monitor or report on the results and then the impact, as you may say. So thanks for that. We might come back to you a bit later, but first I'd like to now hand over or turn over to Gemma. Gemma and I, we worked on this transaction for a long time, but I think it would be great for the audience if you could share, if I may ask, some of the lessons from the issuance of this bond. That would be my first question. And then the second, maybe to talk a little bit more on how ADB engages with the public and private sector to issue more of these types of bonds. And then lastly, maybe more practical or technical, what parties were involved in the whole bond issuance process, because that was also one of the questions that already come in from the audience. Over to you.
Thank you, Sabine. Thank you to my co-panelists and everyone for joining us today. So indeed, I had the pleasure to be the ADB project team leader for the Crystal Gender Bond issuance. And you're right, Sabine, we learned a lot along the way, a lot of lessons that I would like to share with you this morning. So let me start with one. I think number one lesson is that issuing a gender bond should be seen as an end in itself. And this is because gender bonds are subject to higher scrutiny and transparency, and therefore they raise market awareness and the market profile of both the issuers and the investors. So there are some interesting positive intangibles there, as actually Elia mentioned. But also, and equally important, I think issuing a gender bond should be seen also as a means to an end. The ultimate end being gender equality and women empowerment. If you think about it from a purely financial standpoint, a gender bond is no different than a plain vanilla corporate bond. What really makes the difference is the social bond framework and the alignment to the social bond principles that Valerie and Bernhard walk us through. And that is what obliges both issuers and investors to think strategically about how to effectively cater to the women's market and meet that ultimate goal. The second lesson learned, I think it's a little bit of a no-brainer, but still important to mention, there has to be a board and management support at all levels about the importance of the business case for investing in women and in gender bonds. And that has to be trickled down all the way down to, in terms of incentives, to even client-facing positions, including loan officers. And we heard from Ilya's personal commitment, and I think it's a very important and interesting example to follow. The third lesson learned is about a little bit more technical, and it has to do with the need to align the bond structure with the underlying use of proceeds. And by bond structure, I mean size, currency, and tenor. So you should have, as an issuer, early on conversations with the bond arranger and potential interested investors on their appetite, duration appetite, size, ticket sizes, etc., and how that matches with your underlying pipeline for the use of proceeds. And that triggers questions such as whether you might want to issue locally or internationally, in which currency, and so and tenor as well. Ideally, in terms of currency, usually unless you have other hedging options, ideally you should have the currency of your underlying portfolio matched with the currency of the bond. And fourth and last lesson, well, there are actually more, but we can discuss that later in the Q&A. But probably this is to me, the most important one, is about data gathering. I cannot emphasize enough how important it is to have, as an issuer, a robust core banking system and management information system in place that collects, at a minimum, sex disaggregated data, meaning men and women, but ideally other data points as well, such as jobs, sectors, salaries, etc., that will allow you to track and report not only on outcomes and outputs, but also impact further down the road, and find out very interesting analytics to enhance future decisions about how to better cater to the women's market. So I will also try to address Sabine's second question about how ADB is engaging with the private and the public sector to promote more sustainable bonds in general. So one way is precisely what we did with the Crystal Gender Bond subscription, be the anchor investors, to encourage other co-investors to join ADB, again, to trigger demonstration effects also among the investors community. By anchor investor, I mean being the investor that takes the larger ticket and is there from the very beginning, helping with the structuring of design of the project. So in the case of Crystal, we were very clear from the beginning, but that we did not want to be the sole investor. And so we spent a lot of time with the lead arranger, Galton Taggart, talking to other potential investors. And finally, we had Bank of Georgia, one of the two largest banks here in Georgia, join us as well as a co-investor. Second way we are supporting thematic sustainable bonds is by engaging in conversations with governments and central banks to support and enable capital markets environments. Concretely, in the case of Georgia, we are supporting the National Bank of Georgia, the Central Bank, and the Ministry of Finance implement a capital markets development strategy that aims to improve certain infrastructure aspects that will hopefully enhance the issuance of more corporate bonds in general and thematic bonds in particular. So, for example, we're working on themes such as providing more liquidity in the secondary market so that there are trades of these bonds once they are issued. And so this should enhance pricing discovery to that I think particularly that this is crucial to enhance the conversation and shed light on the financial performance of gender bonds and social bonds as an asset class vis-a-vis non-thematic bonds. We're also trying to encourage the participation of institutional investors and ultimately retail investors as well. Then we're also supporting other potential issuers with data gathering. We have a lot of technical assistance projects where we help financial institutions in the region find out, enhance their core banking systems to find out sex disaggregated data. And you could be surprised. So for some financial institutions that never had this picture before, once they start gathering sex disaggregated data, they find all these very interesting patterns, such as, for example, how women prepay differently and usually better than men, how they take less risks, how overall they are better and more profitable clients. So it's so this is what we're doing also with our partner banks and financial institutions. And finally, we're also doing research, and very timely enough, actually, as of I think last week, we published an ADB brief called the Gender Bonds from Incidental to Center States that aims to illustrate the conversations of some of the current challenges and potential ideas about how to promote more social and gender bonds going forward. So also in terms of the question about the market participants, so as Ilya said, there were a lot of stakeholders involved. So we had the ADB as the anchor investor, the co-investor Bank of Georgia, the lead arranger Galton Taggart. We have, of course, the central bank who approved all the prospectus. We had the two legal firms supporting us in putting together all the legal documentation. Of course, we had Scope as the second party opinion provider. I see also in the chat the question about the structure. So we had 25 million Lari issues, which is equivalent to approximately $10 million US dollars. ADB took 75% of that subscription, but Bank of Georgia the rest. And this was a 2-year bullet issuance issued locally in the Georgian Stock Exchange. So this was also very important because it was subscribed in local currency, which, as I said at the beginning, was the currency of the underlying portfolio of proceeds, and this was important to hedge that currency risk. So I'll stop here. I'm very happy to take more questions at the end.
Yeah, thanks very much, Gemma. That was quite a lot of detailed lessons shared that were experienced over the course of this whole process. So, while I think progress has been made on this front in issuing gender bonds, I think there's a lot more that needs to happen to do more of that, and different stakeholders need to all work together to make this happen. I have one question in the chat box that I maybe just because we talked to you just now, which is on the pricing actually, or if these bonds typically are concession financing or the pricing is market driven. And maybe Gemma, you can just maybe speak to that if you like.
Mm-hmm. So concretely, this is fully market aligned, and I think that should probably stay that way, also to incentivize investors to join this type of subscriptions. Now, there are different structures actually, which are performance-based, price-based, and this is something maybe worth another webinar in itself, where the coupon of the bond is actually linked to the actual impact. And this is very interesting also as a potential way to reduce costs for the issuer. But I would also want to debunk the myth about gender bonds being more expensive. Actually, if you think about it, compared to a plain vanilla corporate bond, the only additional cost is the second party opinion, maybe. I think that should be included in the all-in cost, and then eventually compare that to the intangibles also associated to issuing a gender bond or social bond, such as, for example, diversifying the realm of investors and all these increased branding value. So those are my 2 cents on cost.
Thank you, Gemma. I think that that answered it. I have a lot more questions coming in actually from the chat box. So I have one that I might like to pose to either Elia or maybe Valerie. And the question is, must a gender bond be to fund women-owned businesses, or can it also include businesses that exclusively support women? And maybe, I don't know, Elia, you have been very busy already responding to some of the questions, but maybe Valerie or you would like to answer that. If not, then we can.
Actually, that was part of my presentation, but I was maybe too quick. There are different possibilities to include gender lens in use of proceed bonds. So it can be fully dedicated to gender gaps. Then you can call it a gender bond, but it could be also the bond can the proceeds of the bond can fund additional social objectives as per the definition given in the social bond principles. So there are a lot of possibilities to integrate gender lens in the different debt capital market products. So there is a large diversity, and it's really because I've got a direct question also in the chat asking whether there is a need for dedicated standards for gender bonds, and the answer is no, as long as it's not a dedicated label. If we make a comparison, for example, there are blue bonds but actually the blue is green. It's related to the green bond principles, but focusing on ocean or water or whatever. So it's a use of proceed bonds referring to either the social bond principles or the green bond principles with a specific objective. And then the issuer can promote its issuance by referring to the primary objective of the funding.
If I may just add one sentence here, because I really find this very important to elaborate on. It really depends on the region and on the area where the proceeds are used, right? Because if you have too restrictive guidelines on what exactly the purpose shall be, you may be not very successful in allocating the proceeds eventually, right? So if you imagine you are in an environment where 100% of the business is owned by men, but actually led by women, then you miss to support those who are very much involved in the business, but legally not the owners of the business. It's just an example. You can have other examples where you want to have a different fit to basically approach the client group or the target group that you're facing. But in this regard, I think the flexibility of the principles is important also for issuers to make sure that they can have an efficient way of allocating the proceeds to the target group. Nonetheless, it needs to be assessed and it needs to be transparent on what exactly is happening. That, I think, is important for investors, and that's why, for instance, a second-party opinion is there.
Thank you, Bernard and Valerie. Related to that, actually, there was another question that talks about the reporting. Now, the gender bond has a gender bond framework, which applies the 4 core principles of the social bond principles, one of which is actually a strict or stringent reporting of the use of the proceeds and so forth. But maybe, sorry, Bernhard, you would like to, because it touched a little bit in your presentation early on the reporting bit, to speak to that and how this is sort of verified or established.
Yeah, so also here we do have a flexibility. There are issuers who plan to have a reporting that's being verified over the course of the length of the bond. You also have to think about the cost that is related to additional reporting and verification, especially if you want to do that with an external partner. Some companies do have a framework that implicitly that explicitly shows that there will be a verification. Others are just making sure in the framework that they will report on specific metrics to their investors. Others can also state that they want to do it publicly. So there are different options for the issuers. Again, for me and for second-party opinion providers, it's most important to inform investors about the transparency. So to what extent does the issuer comply, and to what extent does the issuer choose to report on the different indicators, but also in terms of, is it public, is it only for investors, or not at all.
Thank you.
And again, we don't want to make it too costly as well, right? So if the cost is already there for the second party opinion, and I think you, Hema, you mentioned that before, right? You have to make sure that the whole process is not becoming more expensive than the actual benefit that you have, that you will gain. And also here in this context, you have already a use of proceeds bond. That means you have only a specific target group for the proceeds. And that all of that needs to be taken into consideration. And in this regard, I think it's always important to note that the flexibility here is very important.
Yeah, thank you, Bernhard. We are running a little bit out of time, actually, but I would like to maybe close off with the one last question that's for everyone who would like to answer, but maybe I'll kick off with Ilya first. And the question was, what do you think is the ideal picture for all parties after the bond is finalized? More empowered women entrepreneurs in Georgia, or anything else in particular that would like to be achieved over the course of the bond lifetime? So maybe, Ilya, would you like to answer this one first? What's your personal objective, or Crystal's objective here?
Sure, thank you. So obviously there are multiple dimensions to that objective. First is naturally the impact objective itself. So we'd like to see more successful women entrepreneur clients in micro and small business segments. So now regarding the number, exact number might be different, because we are able to issue loans up to 36,000 USD right now, but actually because we're becoming a micro bank, that exposure will rise up. So it's not about the number itself, but obviously increasing that funding capacity to the women entrepreneurs themselves. I mean, from the capital market development perspective, because I've closely followed what's going on in Georgia as well, obviously placing more bonds of this nature would be also very beneficial in terms of the overall market development.
Thank you, Ilya. If anybody else wants to contribute from the panel on what's their goals? Maybe ADB, Gemma, would you like to say anything on that?
Yeah, for sure. So I think everything goes hand in hand, right? There's as Ilya said, we want to see more women empowered, more women entrepreneurs, more issuers, going over that initial apparent barriers of issuing the first gender bond. And certainly we want to see more investors coming into this space. If I may speak on behalf of investors, I think it's also very important for investors to nudge a little bit their potential partner borrowers and encourage them to go that extra mile and issue a gender bond because of all the reasons we just explained. And of course, further down the line, what we want to see is to have more data analytics. I think, again, this is crucial to have the tagging of social gender bonds so that we can find out how gender bonds behave vis-a-vis other asset classes. There is an increasing demand for social investments. We just need to put numbers to it to encourage more investors to come into the space and encourage issuers. So hopefully we can get there, not that far away in the future.
I fully concur with you, Gemma. There is a lack of data regarding how use of proceed bonds or sustainability-linked bonds are contributed to reduce the gender gap. So it's important that any issuers, let's say, think when reporting about their use of proceeds, try to analyze whether they fit with the different SDGs, especially SDG 5.
Yeah. Well, thank you very much for all of that. I think we are way out of time, but I think it was such an interesting discussion. We could actually continue. So maybe we should do a second round after a while and then all come together and talk about something similar or in addition to what else needs to be discussed in promoting to have more issuance of gender bonds. So I thank you all for the speakers to take the time out today and talk about your experience, your lessons, your expertise, the standards and everything. I think it was very interesting for the audience. And thank you for the participants also to be quite active in asking a lot of questions. If we haven't answered all of them, I tried to go through them. Please don't hesitate to reach out and we'll be happy to answer them offline, anything else that you would like to address. And with that, I'll close the session. Thank you very much, everyone, for participating and have a nice rest of the day wherever you are. Bye-bye.
Thank you.
Thank you.
Luck.
Thank you. Bye.